And you can see here that they came back higher than expected. The core PPI was expected at 0.3%. It came back at 0.5%. The PPI month over month was expected at 0.3%. It came back at 0.7%. That is the producer price inflation increasing. And what that is creating is it's creating another scare inside of the Fed fund futures. We have 4 hours until the next FOMC statement. And the rate cut expectations have had wild swings here because of the Iran war and because of of course, crude oil, not reaching where it's usually is reaching. So when you look at the Fed fund futures, just a quick summary of what had gone on here in the last 1.5 to 2 weeks was that the rate cut was being priced into June of this year. And then the Iran war started, and then it was pushed all the way to June of 2027. So it moved an entire year. Very rare for that big of a move. And then it screamed back up into, the rate cut screamed right back up into October, December, where it settled in December here. Now you can see where it settled in December from right around Friday. And then Monday, it went sideways. Yesterday, it went sideways. And the Fed fund futures, since those PPI prints, hasn't changed much for December 9th being the expectation of the next rate cut. But what has dramatically changed is January and March and April. You'll notice that we have 40.5 in December, and then it's 40.5 in January. It's 40.2 in March, and it's 40.1 in April. So you can see that there's a much larger distance to travel to pull it into the future, right, than it would be to push it out, or to pull it forward into a sooner cut than it would be to push it farther out. And that means that there's still downside risk. Market participants now are not only getting information out of the commodity markets in an oil shock that is really not comparable to anything that we have in history. We really don't have anything to compare it to. And also, before these higher commodity prices have even hit our econ data, these PPI prints, have we even had the new higher energy prices affect these prints? They're increasing before the energy prices are even affecting our markets. That is scary. And that's why there was a bid inside of the dollar, the VIX. And we're going to talk a little bit about this here. And this is a key moment for our markets as we're moving forward. The dollar's inside of an extension long level. It is in a longer term uptrend. You can see that its intraday downtrend is still intact. It hasn't broken yet. And the same is true when you're looking at the VIX. Let's look at the VIX on the same time frame. It is inside of an extension short level. It hasn't broken them. But we had these little counter trend longs this morning, and this is exactly what we were looking for at the close yesterday. We knew that we were going to have a brand new contract. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.